Hi, I'm Patu from freefincal, and today let's talk about how to invest 50,000 in NPS without disturbing an existing investment portfolio. And what I mean by that is I have always maintained do not invest in NPS, don't touch the individual NPS unless you have your employer offering a contribution, and don't waste too much time worrying about that extra 50,000 tax saving and so on, because you need to invest a lot more for retirement. NPS has got severe problems, especially for those who are in corporate. If you try to exit from the NPS before age 60, 80% of the corpus will be locked away into a pension plan or an annuity, and you can only get 20% out. So, because of that, I've always said stay away from NPS. But then, uh, many readers, viewers have agreed with me on this, and they have stayed away from NPS. But then, many others have this nagging problem. I'm losing 50,000 tax saving. I'm losing 50,000. But my point is, it's trivial compared to what you actually have to invest. But if that 50,000 tax saving is so important to you, then this is what I would suggest, and this is how you should approach the problem without worrying too much. About that, in the sense that you can accommodate that 50,000 in NPS in two different ways. Let me do that. Let me explain. So let's say you have an annual expenses of 4 lakh. That's today. And my suggestion is, and I have shown this before in my previous retirement videos, if your annual expenses is 4 lakh, you should invest minimum 4 lakh in for retirement alone. And of course, this 4 lakh will include the monthly deduction of for EPF or NPS, as the case may be. So, including the mandatory monthly deduction for EPF or NPS, the total investment that you should do is equal to your annual expenses. In this case, it's 4 lakh as an example. So 40% of this 4 lakh should be in fixed income. Let's assume that your retirement is several decades away, at least to, let's say, 15, 20 years away. 40% of that 4 lakh should be in fixed income. That can be in EPF or NPS, pure fixed income. So that's 1.6 lakhs, or about 13,000 a month in EPF or whatever, NPS, whatever. 60% of the 4 lakh should be in equity. That is 2.4 lakhs a year, or 20,000 a month. This can be in equity mutual funds plus stocks, whatever, however way you want to do it. If you can accommodate NPS within this setup, that is within the 40% fixed income, that's what I would recommend. Within the 40% fixed income, then go ahead and add that 50,000. If you're asking why can't I do that in the 60% of equity, it's not pure equity. NPS is not pure equity, and you can't. It's messy. So I would suggest that you keep it as pure fixed income, have no equity in it, and add it to that 40%. You can accommodate NPS within that. Go ahead. But my recommendation is you push yourself to invest. See, 4 lakh is your annual investment. You push your annual expenses. Push yourself to invest 4 lakh, 40% in EPF or NPS employer, if there is an employer contribution, and 60% in stocks. Then over and above that, you add, try and add 50,000 extra to NPS, that you get your tax saving. You may say, no, I'm not earning enough and so on. Yeah, but that's now. You can always, your income will increase in later years. You may get promotions, you will get bonuses, etc. You put that into as an extra in NPS, and also you look for a secondary source of income, and from that income you put it into NPS. So you don't need to worry too much about it, and you can use this extra benefit as a motivation to invest more, and you don't disturb the existing 40% 60% setup. This is what I would recommend. That's the best I can go with respect to accepting NPS, individual NPS. If you have corporate NPS, it's a different matter. Okay, so that's what I wanted to say. Catch you again later. Bye.